growth stocks led the market in the 2010s. Growth stocks were highly valued amid the liquidity and ultra-low interest rates that were released after the 2008 financial crisis. However, the mood has changed a lot in the recent plunge. Undervalued value stocks, which have been relatively marginalized amid the contraction of growth stocks, are emerging relatively. Value stocks are stocks that are traded at a low price because the company's value is relatively undervalued compared to the company's current performance or assets. They are called undervalued stocks. Growth stocks are stocks of companies that are currently growing rapidly. Growth stocks are expected to grow further in the future, so their stock price is higher than their present value. The financial market is fluctuating day after day in fear that the U.S. could raise interest rates sharply at once due to inflation. Financial markets around the world are fluctuating as investor sentiment sharply shrinks due to the U.S. Federal Reserve's forecast of a giant step. There is also growing fear that if interest rates are raised rapidly due to the realization of the giant step, it could lead to an economic downturn and cause stagflation. The 30 years before the outbreak of the pandemic were the era of low interest rates and globalization. This period was an era of a secular bull market. Unlike before the 1980s, market volatility has decreased. The low inflation rate helped maintain the low interest rate base. Even during the bursting of the tech bubble in 2000 and the financial crisis in 2008, the central bank lowered the interest rates to stimulate the economy without the burden of inflation. During the economic crisis, at the time, supply was stable and demand decreased. The growth of tech stocks was remarkable against the background of low volatility and stable earnings structure. Startups credit leverage in a low interest rate environment to lay a foothold for growth. The post-pandemic era is characterized by high interest rates and strong localization with protectionism. The country suffered an economic crisis due to the corona pandemic and the Russian invasion of Ukraine. During the economic crisis, demand was still there, but supply was unstable and prices soared. The Dow and value stocks are holding up relatively well, as growth stock, which had a heavy valuation burden, collapsed amid rising interest rates.